The job title, financial analyst, usually brings to mind a high-speed trading floor. We imagine people in suits shouting over terminal screens, making split-second bets that move millions of dollars. That image only represents a small corner of the industry. In reality, the title acts as an umbrella for two distinct professions. While they use the same vocabulary, they operate with entirely different mindsets. Analysts generally fall into one of two camps. One group scans the market to find and acquire valuable assets. The other looks inward, focusing on the mechanics of a single machine to improve how it functions. Distinguishing between these two perspectives helps explain why two people with the same job title can spend their days doing completely different work. The math is often the same. The difference lies in the objective. Is the goal to evaluate a business as a potential investment, or is the goal to manage its daily operations? The first path is the external lens. Organizations like hedge funds, private equity firms, and asset managers hire analysts to look at companies from the outside to judge their investment potential. Consider an analyst named Alex. She works at an investment firm, where her primary task is to find companies that will provide a high return on investment for her firm's capital. Because she is an outside observer, Alex relies on public data. When she researches a company like SolarTech, she starts by analyzing their publicly available financial statements to see if the business is worth a closer look. To find that answer, she uses a discounted cash flow model, projecting what SolarTech might earn and discounting those future earnings to determine the company's worth. Alex then presents this valuation to an investment committee, providing the evidence they need to decide on the deal. If the deal moves forward, Alex gets access to the company's internal books. This allows her to perform due diligence, checking the facts and refining her forecasts before the purchase is finalized. Alex's work is transactional. She analyzes the business to decide if her firm should own it, but she doesn't help run the company once the check is signed. Most analysts don't work for investment firms. They work inside traditional companies that sell goods and services, and these businesses need internal analysis to stay profitable. This is the internal lens. An analyst like Jordan, who works for a mid-sized manufacturing company, isn't looking for a company to buy. He's looking for ways to keep his own company's economic engine running smoothly. Jordan has a direct line to the data, pulling raw information about sales and logistics directly from the company's internal software. He turns this data into reports, creating visualizations that show management which products are selling, active clients, and growing regions. He also investigates the why behind the numbers. If revenue drops, Jordan talks to the sales and marketing teams to find out if a specific competitor or a market shift caused the change. He also performs cost analysis using a waterfall chart like this one. He starts with total revenue and subtracts operating expenses to find the EBITDA, the profit left over before accounting for things like interest and taxes. When the year ends, Jordan uses these reports to help the finance manager build a budget. They use his analysis of the past year to set the strategy for the next one. Jordan's role is operational. His work acts as a navigation system, helping the company's leadership manage their costs and revenue on a daily basis. On both sides of this divide, the technical tools are the same. Both Alex and Jordan spend their time in spreadsheets and financial models, but they apply those tools toward different ends. A career in this field offers a choice. You can work in the macro, transaction-heavy world of investments, or you can take a role inside a company to see every part of how a business functions. Both paths provide a steep learning curve and the chance to directly shape a company's financial strategy based on the data you uncover. Financial analysts serve as the bridge between raw data and executive action. They take a sea of numbers and turn them into the clear narratives that allow a business to decide its next move.